The information provided in this podcast is for general information purposes only and should not be considered as personal advice. Always consult with a qualified professional or expert in the relevant field for personalised advice tailored to your specific situation. If you're paying for insurances already in your super fund or a structure, have a look to see, is this the right thing that I've got? Mm-hmm. I'm paying for already, I've already got it. And here's my money going out of the fund every year. Is this what I want? Mm-hmm. Is this the right structure that I need? Or perhaps could I do with some of the other covers that are more important to me? Mm-hmm. Perhaps some would go, I want to have a trauma cover, or I want to cover my wage, which is more important because if I don't have my wage, there's no home loan repayment. There's no food on the table.
Hello, and welcome to another episode of The Wealth Guide, sponsored by Ryker Capital. My name is Tamara, and I'm the Advice Practice Manager. And today here on the couch with me, I have three senior advisors from Ryker Capital. Would you like to introduce yourselves again, gentlemen?
Absolutely, Tamara. G'day, guys. My name is Ray, Director and Senior Financial Advisor at Ryker Capital. Very interesting episode today, Tamara. Very excited to talk about it.
Me too. It's going to, let's get stuck in. I am too. And Dean.
Hello, everyone. My name is Dean Dasuki, also Senior Advisor here at Ryker Capital. And this is a very hot topic in the market.
Hot topic.
So I can't wait to unpack it today.
I've got interesting. I've got hot. Ricky.
Hello,
top this one up.
Ricky Rejmi, Senior Advisor at Ryker Capital. Very, very interesting topic indeed. Very useful. I think people would find it very useful, very practical. So we're looking forward to it.
Okay, well, let's launch into this mystery topic that is not a mystery anymore. For me joining the business, I feel like we as a financial planning business, working with some of our professional broker partners for the benefit of our clients, we're like bread and butter to our clients, really, really going together and really aligning a lot of our approach and service ethos and client experience, trying to make sure we've got a really good alignment. Right now too, and I'm not sure the exact data, but I know that the percentage of people who go to a mortgage broker to get a loan, as opposed to going directly to a bank or a lending institution, is kind of hovering around that 70% mark. So why are people going to a broker? I know that I've gone to a broker 3 times in my life. The reason why I've gone is I know that the broker is working for me and they have a panel or choice of different financial product solutions that they could consider that's tailored for me, which is very much like what we do as financial advisors. We also have a panel and we have an approved panel and we have different choices and we try to tailor that for client solutions too. And that's why we're kind of bread and butter is my understanding as well.
Absolutely, Tamara. And to your point, I think absolutely. When I did my loan, instead of walking into the bank, there was no way I was going to do that. I wanted to go see a broker. Yeah. I wanted the offering and the solutions and the service that the mortgage brokers offer is second to none. Yeah. So why would I go directly to the bank when I had these solution offerings from a broker who sort of went to me going, Ray, you've got A, B, C, D, E solutions. This is some of the benefits they can offer. This is some of the other benefits, ancillary benefits that you can get on top of it. So I was like, I would get that from another bank or from another institution, or they would not advocate about another institution.
Very good. Very good. Yeah. So that definitely. Now, what is the topic that we're talking about? We're talking about oftentimes when people, and I know I did as well, when I went to get a loan, my broker asked me about things like, managing my risk. My income is very, very important. I was servicing the loan. I'm a single parent as well. And it was very, very important that I had my income. So we talked about income protection insurance. If I passed away prematurely, I still have a dependent daughter living at home with me. I still had a little bit, obviously had the mortgage on the property. Do I need some life insurance, for example, to cover the mortgage? So those are the types of very responsible things that the broker came up with. Now, there was a couple of options, working with a financial advisor to get a tailored solution and go through a similar process like I did when I went to a broker, or the broker did have, with respect to the aggregator that they were with, they did have a direct or a single solution they could offer me as well as a choice. So those are my choices when I went to the broker with regards to risk management, right?
Right, which sort of astounds me a little bit because obviously the whole gist of why people go to a mortgage broker is a quite large variety of panel. However, I think when we look at a solution like that, a similar sort of solution would be viable to a client where you're sort of extending that services out from mortgage broking to go, well, look, why don't you go speak to a financial planner who can provide you an array of solutions as far as the structure of the insurance, whether it's about tax, whether it's about how do I create an insurance structure which is going to be a tax deductible for me, it's going to provide me a solution which is not going to affect all of my cash flow, and also going to provide me for stipulated events that I want to be covered for. So those are the key important considerations to sort of think about rather than boxing the client to go, this is how we work with. So this is the reason why the solution that we offer, more and more mortgage brokers and accountants that are joining us to go, guys, we would love for your services to be provided to our audience or to our clients who are in need of those services rather than just one size fits all.
Well, that was exactly it. And the broker I have, and this is years ago. So it's not a broker that I currently, have a relationship at all with. Years ago, but the broker did a good job in being really clear. This was the single insurance offer that was on the table through him. He really didn't have, that wasn't his bread and butter. It was kind of you know what I mean? So it was kind of like, this is what it does. I can't say whether it's right or wrong for you. This is what it is and what it does.
Yeah.
If you see a financial advisor, to your point, you're going to get a tailored experience.
Exactly.
So is that what you're talking about? So
that's exactly what I'm
and the
talking about,
broker was very, very clear about that.
And sometimes they're limited by their license in their ability to speak about it, Tamara, because it is quite an involved product. It is a quite complicated product. It is a quite structured product in a sense that you can make it tax effective the way you want it to be. And I know with my insurances, particularly having 3 kids, I wanted to make sure some of these events and structures that I wanted to cover for, they are quite tailored. And I wanted to make sure that I could write some of that off in my tax bill. Why wouldn't I? So I can utilize some of that tax dollars to cover myself. I'd love to do that.
So you're talking about having an insurance solution that is really, it's strategic as well as not just sum insured. If I die, this happens.
Yeah.
You're being more because of the complexity
Because of
your family?
Correct, exactly right. So it was tailored to my situation, given my needs and wants and what I wanted to sort of provide those covers for. So whether it be the life insurance, whether it be the trauma cover, whether it be covering the wage cover, and provides a perfect solution and the events that it actually covered inside it. So in an insurance side, if you ever sort of picked up a PDS, I don't know if you have, but there are a lot of different exclusions and terms and conditions in the policy, which most of the brokers don't know about. And neither is part of their role to do so.
Life products are definitely very complex. One thing that personally that I've noticed and experienced so many times where clients may have a policy in place, and they feel like it's pretty straightforward. It should cover them. But unfortunately, sometimes coming claim time, they've had a bit of issues. So it's important to really understand as well whether, I don't know, if you got the time to go and read 150 page PDS to make sure that's correct, or maybe going out and having a chat to a professional to be able to help you with doing that. But it's important to understand, even if you do maybe have some cover, understanding how it works, when is it going to pay out, and most importantly, is it actually going to pay out? Like you're paying these premiums.
Yeah.
There's money coming out of your pocket in the event of something happening. Is the insurer going to actually pay out?
But it's one thing about reading the PDS, Dean, but it's another thing to compare it, to go,
correct,
what am I comparing this to? What is the benchmark? What is the rating of this product, right? So I think that's the key consideration. And unfortunately, brokers don't have that kind of time to sort of worry about going, well, is this the right solution offering to my client? Or am I about to set my client into something which will have no payout and is going to come back to bite me?
Well, they're not comparing. To your point, that's not the bread and butter. No. They have this as a solution, but it's not a comparison. It's not a panel of insurers. No. And that's where it's kind of, we have a similar, I guess, ethos or approach with a financial advisor. Can you dive into a little bit more, Ricky, about when I say panel, what am I talking about? That sounds like it's technical advisors speak, different providers. What do I mean by that?
Well, absolutely, Tamara. Well, as you alluded before, when you go see a broker, you getting a range of banks or a company, financial institution providing loans. So a customer gets to choose from a variety of panel. Similarly to insurance, when they come and see a financial advisor, they get to see a different range of insurance company, because every insurance company might have a different appetite on what they might cover, what's an ideal client, because some might only prefer white collar jobs. Some may cover, blue collar jobs. So it just depends. And a financial planner could then assess your situation, understand what your jobs like and what your health situation's like, and then tailor a cover for that client situation, which as opposed to, on the other hand, going directly with one provider may not be the right fit for the client.
Yep.
So it's just choosing the right one. And even going back to the previous conversation we were having, I was thinking about a client that I just saw about a couple of weeks ago. They were paying for a mortgage insurance. So they were paying, it did cover life, but it was linked to the mortgage balance.
What does that mean?
So it was interesting. I had to call and confirm myself just to make sure that I was looking at it correctly. So it linked to the mortgage balance. So it did say, because they took out the loan initially, for example, say let's say $500,000. So they would have life in the event of life or client passing away, the insurer would pay the mortgage of $500,000. Now, fast forward 10 years later, that $500,000 mortgage has now become $400,000 or $350,000. And they're still paying more insurance. The insurance is going up in line with CPI, the premiums.
Okay.
But the payout figure from $500,000 now become $350,000
because I was paying down the mortgage.
Because you've been the 10 years, you've been also paying down the mortgage.
But I'm being penalized, it sounds like, because my premium is still staying high. Okay, I get it.
And not only that,
Exactly. You're paying more for less.
Absolutely. And another point to add to it, it is directly linked to your mortgage. So your client can't choose, even if they were to get $350,000, where to direct that money to.
Yeah.
They could have a spouse working and they might not want to pay the mortgage. They might want to use that money for kids' education or any other thing, or buying another property, for example.
Yeah.
But it was just linked to the mortgage.
It had to be
so
paid.
It just had to go into that mortgage.
No, and that's a really good point, and that's part of what you said about the tailoring, isn't it?
It is.
You know what I mean?
But I think it's very dangerous, I feel, that just taking that one-sided single approach to a client to just go, well, this is what I've got and this is what I'm going to recommend because it's on the panel over here. I think it's extremely bit of risk for the client, because if that product solution did not offer some of those key considerations, that client could have got paid out in some of the other policies, but we've recommended that just because it's on panel, client could be in a lot of hurt. Not to mention the broker is put in such a terrible situation that here I am in the trust that I've recommended this product. However, it does not have a payout. And having to claim manage that process or manage that expectation of a client, it's just dreadful. I'd feel horrible and terrible to go, I recommended this product, but it did not do what it was meant to do when it came at the time to provide for my client's needs.
No, I can tell. And as you said, that because that's not their bread and butter. That's just something they can offer as another thing as well.
And we've seen more and more of this happening previously. So I think that's why we've sort of seen
why it's topical.
Exactly.
Yeah.
So we've seen more of the mortgage brokers now reach out to go, hey, look, we want to provide a full, vast suite of products and offerings to our client. But rather than just going this one line where what our aggregator or potentially they might have recommended from their side, we want to be able to customize solutions for them. Now, whether it be in the case of a medical instance, because some of those clients, let's just say, may be diabetic as an example. Now, not every other insurance offering will provide that, perhaps, or it might have some of the medical event where they haven't done much of an underwriting, but they have paid the premium, but come at claim time, they'll go, but because you had X, Y, and Z conditions, sorry, Mr. Client, we can't pay you.
Yeah. So really, the things I'm picking up is really three things now. So we're talking about specific personal things as far as my health and my history. We're talking about a strategy and how I actually set up my insurance, or whether it's inside super, some outside of super, how I'm paying premiums, etc. And to your point, Ricky, it's about let's look at different product suites that might be more attuned and aligned with your particular circumstances, your occupation, etc. So that really is the tailoring and the advantage of having a similar experience, like when you're going to see a broker and then go to see a financial advisor for the insurance. And that way I'm having a similar experience as a client and a similar approach if I look at it that way. Is that?
That is exactly to the point. But I think it goes a little bit above that, Tamara, because when we sort of work with some of the mortgage brokers that we have worked with, we also became a bit of a key stakeholder relationship manager. So we hold a lot of clients' hand during the process of that part.
Sure.
But not only that, as client circumstances have changed over the course of a period of time, where they'll go, well, Ray, I'm just about to, I think I might like to buy another property, or might look to sort of reduce my taxes using negative gearing strategies. We will then go back to our broker to go, hey, Joe, remember the client you referred me? He's just about to go buy another property. I recommend you should have a conversation with him.
Yeah.
So it becomes a good relationship piece or segue for us to then introduce that further business back to our brokers.
Well, for sure. And then what does that additional, I guess, element of their wealth creation strategy do to any tweaking we have to do with their risk management as well?
Correct.
So
and then we
really
further tweak the risk management there as part of our process.
I think that's actually really good as well, because I think just to add on to that, especially with a lot of the younger clients, what I've happened to notice is, especially in Australia, everyone's pretty hot topic is property. Everyone loves buying property.
Yep.
Everyone gets so excited to jump onto that first property, and the goal a lot of the time is for them to continue building that portfolio.
Yeah.
So one of the things that I've seen happen a lot and been able to help my clients with is giving them and helping them with around a debt reduction strategy, so that we can help them build up some equity within their property. And by doing that, then that puts them in a step closer to be able to then do and go down the avenue of buying that investment property that they're looking at achieving and things like that. And the good thing is when we do that as well, we can understand what their cash flow looks like. We can do some projections for them to give them some rough idea. If you were to put an extra $200 a week towards the mortgage, you might be able to actually achieve that goal of buying an investment property within the next 2-3 years. So it's a great value add back to
I think that's a phenomenal part of some of the strategy we do. I think I'm very proud of it, because what we enable the client to do is to sort of provide that snapshot at that point in time that if you continue these behaviors, this is how you'll be able to meet your goals and objectives to buy another asset that you're after. Look, again, us as financial planners, we're not bound to go, you should just do managed funds, because that's not what we're all about. It's all comes down to, what is your personal preference, Mr. Klein? How would you like to see your wealth grow? Now, that can be a combination of both, or it could be completely property, completely shares, but it's more driven by the client, because where they see their assets grow and how they want to grow it. Our job is to facilitate, give ideas, give improvements, and provide that bit of tax structuring or layering there to help them enable to do so. So great point.
Do we have, and I know we were kind of chit-chatting about it yesterday at the office, an instance where you guys had a client who did take up some of that insurance that was on the broker's, I guess, list of things like offers that they could have, and it kind of probably didn't suit the client exactly. Was there?
Yeah. So tomorrow, look, in my previous life working at the bank, we saw the broker sort of recommend a product offering to a client, whilst the client had taken the insurance out and hoping that would suit their needs, but come at the time of claim, when the client had a cancer event, unfortunately, it didn't pay out in the event of a life insurance because there were some pre-existing conditions or perhaps a PDS wording there that didn't meet the client and effectively didn't result in a payout. Now, not only I was sort of worried about for the client, but also at the same time for the broker, like I mentioned in my previous instances where he has personally sort of held himself accountable to go, look, I've recommended this and I have not done the right thing here. So for a broker, it's a terrible experience, not to mention the same thing for the client where they've got young families and they need to be paid out on that instance, and that didn't happen. So yes, that was one of the instances that I've had, or one of the many that I've heard around the industries as well, similar to that event. So I think this again, going back to the point of offering a wide range of solutions that would have fit the client, is very key important. Another good thing is also, guys, look at the government website called the moneysmart.gov.au. If you ever go into the moneysmart.gov.au website and look at claims comparison tool, we are going to put the link on our website or on this podcast where you can simply go to the claims comparison tool and you can play around with it to see insurance companies, what are their payout rates? And I think that'd be very, very interesting to sort of see where do you sit within that insurance company payout rates. And I think government's put out that information, which is quite handy actually.
And this is what we do at claims time. We, as advisors, we help client in order to assist them with their claims because things have already gone wrong if someone's making a claim. So they're already going through a hard time. And with regards to that, there's a process where the insurance company needs to be notified. There's certain application form needs to be filled. Doctor's report needs to be provided. So as an advisor, we can assist client in order to make that claim and to ensure that it does, we try everything we can to make sure that the claim does go through, which if they have an underwritten cover that we've spoken about before, which provides more certainty because the insurance company already knows about their health, their occupation, they've approved that, and now the claims process is a lot easier, as opposed to what stories we've heard before, where it's a group cover. Insurance company didn't know anything about the client. They just gave the cover because it's in a group, which means there's more underwriting at the time of claim, which makes claim process much more longer, more cumbersome, more time consuming.
And stressful.
Absolutely.
Not to mention the covers were decreasing. Like here I am paying amount of money for these insurances and they're going down in value.
And you're paying more.
And I'm paying more. And I'm going, why would I pay you that amount of money for no reason?
Which is definitely what we talked about and did go into a lot of detail before. But what I tweaked on with you is that you guys are used to, as financial advisors, when there is that unfortunate event, holding a client's hand and supporting them with the claims management that the insurance company is doing. Whereas probably to your point earlier, Ray, a broker, that's not their specialty. So they don't have that experience, or probably they're not set up to do that. So we've got that disconnect too. Yeah.
Correct.
I just wanted to add to that as well. Like one of the brokers that I worked with recently, he had a conversation with him around one of his clients, and what had happened was he actually spoke to the client around some what's their current position around the insurances and the protection piece, and the client was explained to the broker that they're fine, they don't need cover because they've got something already built in super, and they felt that was going to pay it out. Now then the broker gave me a call some time after it all, because unfortunately the client did suffer a stroke, and they weren't able to continue to work, and they went to go and make a claim within the fund, and the insurances that they had within the super fund, they just didn't pay out. They just came up with all the excuses and a few clauses and things that within the PDS contract, and they wouldn't pay it out.
Can we name and shame them? Probably not.
No, I don't. We won't do that. We won't do that. So that's
to do that.
That's so that's definitely two things as well. You're right. So working with a broker, and again, that's not the broker in the broker's wheelhouse to do that, to assess that, and kind of like, okay, you've got that, or you've got the direct one solution that is on offer.
And look, obviously, most of the brokers want to do the right thing and want to help their clients out,
Of course
and have
they do.
that safety net for their clients.
Yeah, absolutely.
Should something go wrong, is that safety net there is to catch them.
Yeah, it is. It
And
is.
especially if you're paying for insurances already in your super fund or a structure, have a look to see, is this the right thing that I've got? I'm paying for already. I've already got it, right? And here's my money going out of the fund every year. Is this what I want? Is this the right structure that I need? Or perhaps could I do with some of the other covers that are more important to me? Perhaps some would go, I want to have a trauma cover, or I want to cover my wage, which is more important, because if I don't have my wage, there's no home loan repayment. There's no food on the table.
No, absolutely not. No, that is unpacking it very, very well, gentlemen. So we'll leave it to you as an audience to really decide, was this interesting? Was it controversial? Does it make sense to you? So definitely, as we do when we work with our brokers, like the bread and butter, making sure that if you're a client, you have that really tailored solution, both for your lending as well as your risk management. Thank you very much. We'll see you next episode.